So that's what I would do with the portfolio. What I'm showing here is the worksheet stuff that we've put together at Manifest Investing, where I've taken the Cephalon and literally removed it from the portfolio, put it into this inactive area down here. And when we do that, the cash bumps up to 6.5%. You can see that the proceeds from a potential sale are in there. And at this point, I would focus my attention on the companies at the top, not Fastenal because of the stock split situation, but certainly some of these companies up at the top would be considered as potential accumulation targets for the portfolio. You can see that the percent of total assets in Google, Microsoft, Aflac, even the fund or Sigma Designs, these are all relatively small. I don't believe I would feel too good about adding too much more to Apple. It's already 12% of total assets. So again, we're looking for companies that will boost the overall return of the club portfolio that aren't already in dominant or full positions in the portfolio. So some of the ideas to study and carefully consider come from the top of that list.
Mark, I have a question for you.
Yep.
Since Cephalon is a non-core holding, would you confine your search on the top of this list to other non-core holdings when you're making a purchase?
Oh boy, that's not an easy answer. In general, probably yes. I don't know. I think I would look at the field of opportunity. My answer to the question is, I would actually look at the field of opportunity, and I would not restrict it to core and non-core. I'd be willing to accept a core opportunity if it was a really compelling one. You know, the Microsoft one there is compelling, probably merits consideration. You know, I would probably lean a little bit towards non-core stuff if I were able to find something. But I wouldn't obsess. I certainly would not make it hard and fast. I'd go out and shop for that opportunity. I may have ducked that question. Go ahead.
Let me follow up, Mark. With Sigma Designs being a non-core holding and representing only 1% of the portfolio, might that rise to the top of the list for consideration?
It could. And again, with a company like Sigma, it's an emergent, fairly new company. They have enough quality so they can, you know, I'm doing air quotes right now. You can't see them, but they can actually afford to do some lower quality stuff because of the high overall quality portfolio, quality of the overall portfolio. So it could be one that could merit some careful consideration. And I know that they have a couple of the ladies are following Sigma Designs fairly carefully. So again, that's something they might consider.
Mark, I'm going to unmute Dick Lewis. Dick, go ahead with your question.
Yeah, just a quick question concerning the buyout of Cephalon by Teva.
Mm-hmm.
How is that likely to affect the current price of Teva?
Well, that's a tough one. I mean, in the world of arbitrage, people are going to take a look at the deal, and they're going to take a look at the size of the deal and compare it to the size of Teva before the deal. And then they're going to make a judgment. You know, how big is it compared to the overall company going forward? And then they're going to make some judgments about the overall price. And let me comment to the overall price. I don't think they're offering quite as much as is being seen in the mergers and acquisition market. Why do I say that? The projected return down here is almost 6%. It's not unusual to see an acquisition situation, especially in a higher technology area where the projected return at the acquisition price, it could be negative 5%. You know, to us it would seem like they're overpaying. So again, you kind of make that judgment. In this case, I would say Cephalon is not big relative to the total size of Teva, you know, on a relative basis, and they're not overpaying. I wouldn't expect there to be much impact on the Teva price at all in the short term. That's just an opinion. Okay, thanks for the question, Dick. All right, as far as some other areas for the plungers to go shopping, because sometimes you might want to go outside the portfolio, sometimes you might want to be looking for, as Ken was suggesting, you might search for opportunities that might be a little bit more deep value. By the way, this deep value screen was inspired by the Challenge Club in combination with that mattress company, the Select Comfort Experience. And what you're looking at here is straight out of a value line, simply a three-part screen where we look for companies that have high elevated returns. Second, relatively low long-term debt to capital, and we capped it at 20%. So the highest one that you see there is 19.29%. Again, that's long-term debt as a percent of total capital. And last but not least, we want to limit it to companies that are at least average, hopefully above average, so anything B plus and above. And so as I'm going down that list, my attention is obviously drawn to the B plus pluses, A's, and A pluses probably first. But I certainly see very interesting candidates for study, depending on how you feel about the education situation. Strayer Education could be interesting. Sketchers, perhaps that study of Sigma Designs might actually play fairly well with studies of Smith Micro and Research in Motion, which, by the way, is A plus stock over here. I have not studied it in any great detail, but it's something that we could get into. You see some other opportunities. One of Ken's favorites, and I still have a lot of faith in this one, even though it's sagged a little bit, is Zhongpin, ticker symbol HOGS, that you see here. That's a Chinese pork producer. You can see that fairly high expectations for that company. Certainly, I don't believe that there's any time to panic, and the B plus is no surprise considering that it's a Chinese company. You see some other names on here. I would avoid this one. This is an accident, but I would still avoid this one because it's in the whirlpool, the Chinese whirlpool right now, where all these companies are getting sucked down in price. But you see some other fairly compelling studies, and this is why I kind of hedged my answer. Teva's here by itself. Intel, by the way, is up 10 to 15% in the last month since we first started looking at this on the value screen. So again, you might find a non-core opportunity here. It could be one of these with the elevated returns up here at the top of the chart. But again, there are some candidates here that probably merit further study, and if we have a couple minutes here, I'll show where we are posting this on about a monthly basis. It's something that we briefly visit during the Challenge Club meetings that come about midway through each month. So again, some fairly interesting study opportunities right on that deep value screen.
Mark, just to clarify, this is a screen that you've done from Value Line itself, correct?
Yes.
And in order to run this screen on a daily or a weekly basis, people would have to go somewhere where there is a Value Line subscription, perhaps their local library, for example.
Yeah, I believe so. Or if they happen to have either in their club or individually a subscription to Value Line, then you can do it using ValueLine.com. There is a screener right in at ValueLine.com, so you could get away with it there.
And then, Mark, you're indicating that you're posting this screen about once a month on the Manifest site as well?
Yeah, we post it in the Manifest forum, and we actually post it for free out in the world of Facebook, and I'll try to remember to show that. I'll make a note to actually show where we post it so you can see where you might watch for that going forward. So again, just a matter of pointing out some opportunities for the golfers of the world. Callaway Golf is a company that I've wondered about for some time, and it's actually showing up on this list right now down there at number 19.
Mark, one more question. Is this a excuse me, is this a preset screen, or did you create the screen?
No, we created it, and with the limits that I just talked about. Greater than B plus financial strength, equal to or greater than B plus financial strength, long-term debt to capital less than 20%, and then it is literally just ranked by the highest projected annualized total return from there on.
Okay, I've cleared the question box again, Mark. Thank you.
Okay, and there are some fun companies in there. I've wondered about KKR before, so interesting things for doing. Cy Lynch would certainly second this one. Screening for hotbeds of opportunity. One of the things we do at Manifest is we do cover funds. These are continuously updated now. These are the Vanguard. They follow the Standard & Poor's sectors from technology all the way down to utilities. I've sorted them out here, as we always do, by projected annual return, suggesting that today, in today's world, there just might be a few more interesting opportunities in those at the top. Technology, financials, and healthcare. And just as an example, you can actually click through by clicking on any one of these, but if you were to click on any one of these symbols, you're taken to this. In this case, in fact, I chose financials because I just think that I'm just getting this feeling that there may be some interesting opportunities in the financial sector right now. They have been more than interesting for quite some time, but it might be worth some fairly carefully considered study. The one up at the top is Wells Fargo. We'll take a quick look at that one just as an example of things that you might look at. But there's some awfully good companies at the top of that list, including one of our longtime community favorites, Aflac. Here's a closer look at a couple of things for qualifying Wells Fargo as an opportunity. At the top of the chart, you see an extract from Value Line where we point out that the current PE is down around 10 times earnings. One of the other things that we counsel as watching fairly carefully is the projected low total return. And again, that's the annualized total return. Their 3 to 5 year forecast. In this case, it's their low forecast. And we're just finding that many times a well considered condition study, following the stuff that we like to do, generally delivers a stock study with a result somewhere closer to that number than anything else. For years I've said average. I now say make sure you keep that number as at least a second opinion. One of the places of potential concern when it comes to Wells Fargo is a little bit of a flat spot in their book value for 2010 versus 2011. But again, it's nothing to write home about in fear. You can see down at the bottom a visual analysis. Now we do approach these a little bit differently at Manifest, and we're going to actually have a class here shortly. We'll break these down, but we plot book value versus earnings, and the difference between the two lines. Instead of sales, we're actually plotting book value. And again, we look at the growth of book value very much in the same way that Warren Buffett looks at companies. And oh, by the way, there are reports that Berkshire Hathaway and Warren Buffett are just loading up on Wells Fargo right now. You can read a report on Morningstar today about extremely strong interest in Wells Fargo by Berkshire Hathaway. So again, the longer-term trend, I've taken out these years because those are pre-Washington Mutual, pre-Great Recession. Let's talk about the combined company going forward. And in fact, at Manifest, we'll probably be dropping those numbers down on the basis of this issue 13 analysis from 10% closer to 8%. But again, the thing that you're trying to gauge is, again, these are asset accumulators. What's their return on equity? And in this case, we're talking about a return on equity that is, a little bit lower than historical levels, but certainly feasible at 12.5%. And again, when you look at it in this top line, bottom line type perspective, the difference between the two lines is a function of the return on equity. That is literally the return on equity that you're looking at there. So that's one that I would take a look at if the Plungers gave me their money. And by the way, ladies, you're welcome to do that at any time. Just as an example, in the worksheet, I went ahead and spent their cash on Wells Fargo just to make a point that as you use these worksheets, you can gauge the impact on the portfolio. So, well, again, we have sold Cephalon, we've added it to the cash, we've, nearly extinguished the cash, not a whole lot of it left, invested it in Wells Fargo. It does represent 6.5% of the portfolio. And if we had done that, and if these returns are good, the overall impact on the portfolio is to raise that overall portfolio projected return up into the 13 to 14 range, by the infusion of the Wells Fargo. So again, this is how we coach or counsel that you ought to think about this situation. Here are the portfolio highlights before. And again, making the decisions on a complete portfolio-centered basis. Here was the condition of the portfolio before the sale of Cephalon and the potential purchase of Wells Fargo. Here's the situation after. And you can see that we didn't disrupt anything. The growth is still okay. The projected PE is still okay. We didn't mess any of that up. A little bit more yield because Wells Fargo will certainly have a yield going forward, even a little bit more financial strength. Earning stability has not been wrecked, and we actually added a little bit to the quality in the case of a Wells Fargo and tacked on 1% and got the portfolio back into that target range. And again, that's just one transaction. You can see that down here in the overall look of the portfolio, the sale of Cephalon and the purchase of Wells Fargo means that we basically converted some cash and some health care into financials, and that is now 9% of the portfolio. So again, this is the type of metric or gauging that you can do, and we basically like the image of the yardstick there. So with that, let's just transition into questions and answers, see if anybody's got any comments, see if the Plungers themselves have anything they would like to pursue or clarify. We'll just use this as a commercial break just to point out that if you're in an investment club and would be interested in a manifest subscription for everybody, just let us know. My email's there at the bottom. The price is fairly attractive, and again, all partners receive access, receive their own accounts, and it's just a very attractive way to get involved with us. What do we see, Ken? Is there anything that we need to
right now, Mark, there's no hands up, and the question box is clear.
Okay. One of the things I did promise as you guys are warming up to any questions that you might have or comments is to take a look at where we are posting, where we are sharing. This is the Manifest Investing Facebook page. This is one place that we're sharing that screen from Value Line. By the way, we actually take a look at a couple of featured companies every week in Value Line as we take a look at the fresh companies out there. Let me see how that looks on your screens. Okay. And then if you just kind of scroll down a little bit, here it is right here. Here's the deep value screen for May, that same image that you had up on your screen within the presentation. If you click on it, you're taken to some brief comments about what it is, and then you're also taken to the list. And we do also put, in fact, I'll go to it right now, we put together a public dashboard. And this will literally be how $100 in these stocks has performed over the last few days. You can see that DeVry and Strayer are actually up a little bit from their initial $100 position. You remember I said avoid the China biotics thing? It's actually down 30% in the last 3 or 4 days. That's why I say be careful out there. So again, this is a public dashboard that we have, and again, inspired by the Challenge Club, and potentially a source of study opportunities. Sorted by par if you want. Focus on the ones at the top. Don't get too carried away with these until you're, again, these are definitely cautionary, be careful out there type conditions. Anything else, Ken?
Mark, we do have a question. This is coming from Norm. He said, I just got a new headset and mic. I'd like to test it before you sign off. So Norm, I'm gonna unmute you, Norm, and we'll see if we can talk to you right now, okay? You're unmuted. Give it a try, Norm.
Okay. Can you hear me?
Fantastic.
We can hear you just great. Just tremendous, okay?
We can hear you.
All right. Thanks a lot.
I'm going to put you back on mute then, Norm. Mark, there are no questions right now, and there are no hands in the air.
All right, well, let me just leave one last thing, and then we'll just stick around for any comments after we've basically officially adjourned. One last thing on the Facebook page or within the manifest form, and I'll show you that in a second. If you go to the events section, we're actually going to have a session 2 nights from now we call our round table. And you can see here that the round table is this coming Thursday night, 8:30 to, well, we'll wrap up before 11, but it starts at 8:30. We generally run just a little bit over an hour where we'll actually be bringing our favorite stocks. And Cy Lynch will be sharing the big picture this month. So that's actually coming up in 2 nights. If you're interested in that, can't find it, let me know. So with that, I think we'll go ahead and...
Well, we are getting some questions now, Mark. Blas would like to know, how can a club like his be selected for this program?
All you got to do is send me a note. You saw my email address there. Send me a note that you're interested in doing it. We've only got a couple clubs booked for the next 5 or 6 months, and we're always interested in hearing. And for those of you that wonder about this, again, if you want to remain anonymous through this program, we salute the Plungers for their bravery and courage in actually holding themselves out there, but they've always been fantastic. But if you want to remain anonymous, you can enter what we call our witness protection program, and we will actually treat you anonymously. But one of the things that we have discovered is that we can literally take any portfolio and find a story or a concept or something that we can use as a teachable moment. And so if you're interested in having your club's portfolio featured, send me a note. You can also send a note to Lori. We're both watching for the clubs that are interested in participating, but just send me an email and we'll follow up on it and take it from there.
Mark, we have a comment from Ann Manning. Ann would like to know, what do the ladies of the Plungers think of your analysis? Maybe one of the ladies of the Plungers can raise their hand. Here's Lynn Fieldhouse. Is Lynn one of the Plungers?
She is.
Yes.
All right, hold on a second. I'm going to unmute you, Lynn. You're unmuted. And what do the ladies of the Plungers think, Lynn?
Well, we find this very interesting. And first of all, thank you, Mark, for taking us on. I know that we were not an easy group to work with,
Oh,
but
yes,
we
you
have a
are.
couple of questions.
Yeah, go ahead. Thanks.
Okay, we have a couple of questions. One is about the fact that we really have always looked at stocks as for growth. And it appears that now you're telling us that we should also be looking at value. Is that correct?
Oh, definitely. And in fact, I can remember Tom O'Hara bristling that we're not just growth investors. We're definitely a very strategic combination of growth and value. And
Okay.
you know, basically Nicholson said some of this general market security. You know, the example I used was a bit extreme, but there are just so many opportunities that are less traditional that you should watch for them, and value is extremely important.
Yeah.
What else?
Well, we have another question. For the Wells Fargo, do they value their assets mark to market?
Lynn, you'll have to repeat that. Lynn, you'll have to repeat that question. We had somebody drop something, and it was all muddled at the end. So could you repeat the question for us?
Okay, the question is specifically about Wells Fargo and other financial stocks. Do they value their assets mark to market?
I'm certain that they do. I mean, first of all, I'm not an accountant, so I don't get too tripped up in those type of details. We'll let Lori bill us out if it gets too hairy. But you know, it really comes down to the larger notion of who Wells Fargo is and how they approach the management. You know, how they approach their opportunities. And you can read all you want to, and for the last several years, Warren Buffett and Berkshire Hathaway have held this company, and they hold the management in the highest regard. And they do have some special challenges. And Wachovia and what's the other company? It's escaping me right now, but the Northwestern Mutual Company, I forget it right now. But anyhow, everything they do is done fairly conservatively. I mean, a lot of the heritage of the company comes right out of the Minneapolis area, and again, Minneapolis is considered Midwest, and many times the banks of the Midwest, and I know the Plungers ladies know this. So the banks in the Midwest, they're even grouped separately by value line, because historically the banks in the Midwest have been more conservative and cautionary with how they manage their companies. And they may have lost their footing a little bit, some of them, here over the last few years, but I think they'll regain it. And again, historically, that's the reason that the Midwestern banks were set aside in a special industry group of their own. So, you know, we in the Midwest are pretty proud of that. Washington Mutual is the name of the other one. And they have awesome challenges with respect to all of those things, but you know, the valuation of assets, however they're doing it, they're probably doing it in more conservative fashion when they do their strategic planning than the average bank.
And one of the Wachovia mergers, Mark, came from Norwest Bank in Minneapolis.
Right.
Lynn, you're still unmuted. Do you have other questions?
No, but we would just like to add one comment. In your opening slide on this, you said we've been around since 1987. We've been around since 1982.
82? Oh, man, I messed up. Sorry. I'll add 5 years to it when I put it up online.
Thank you.
He's making us younger.
Well, thank you, ladies, for volunteering your portfolio. I think there's a lot that can be learned from watching the things that you have done, and I really do think you're taking the right strides to try to reach those, you know, premium performance levels that the club experienced.
Mark, we have a question from John. He says, are you no longer using the modified preferred procedure for your analysis?
Oh, no, John, the answer is absolutely. Everything that we do at Manifest Investing is the modified preferred procedure, or as some people recognize it, the expected income statement. So no, the equity analysis guide and all the stuff that we do, every single analysis is modified preferred procedure, if you want to think of it that way.
We have a question from Dick. How many members does this club have, and what is the monthly contribution? I don't know if Lynn wants to share those two things, but Lynn, you're unmuted if you wish to answer either one of those questions. How many members do you have, and what are your monthly contributions?
We are an all-female group. We are limited to no more than 16 members, and we currently have 16 members. Some of them are the original members. Some of them have joined within the last couple of years, and the rest of us fall somewhere in between. The minimum contribution is $20 a month. We have no maximum, but most of the ladies contribute generally somewhere around $100 a month, but some more and some less.
And Lynn, could you give us a general idea of how much money in total you generate each month for investment?
Generally, it's about $2,000 a month. Again, $2,000, $2,100, somewhere around there. Sometimes a little bit more, but I'm the treasurer currently, and it's been pretty consistent, about $2,100 a month.
Thank you, Lynn. We appreciate that, and I hope that answers your question, Dick. Mark, I've cleared the question box, and there's no hands in the air.
Okay, well then
if we want to give people 1 or 2, half minutes here to see if there's anything going to come up, but it looks like things, well, we have a question from Herb. I can always count on Herb for one question an evening. Herb wants to know, what changes did you make to make your club more interesting for your membership? And so I think they're asking back to Lynn again. Lynn, what do you do to keep the interest high in your club?
Quite frankly, we started selling stuff. And that sounds a little comical, but the reality is we had a number of stocks that we had pretty much since the beginning of time, and we continued to buy them or just hold them. And I think as newer members came in and as more opportunities were presented to the club, and as we became more sophisticated investors, if you will, we decided that there are opportunities out there, and we're taking advantage of them. But we certainly do not do any without careful consideration.
Fantastic. Thank you, Lynn.
That's a really cool answer, and I actually kind of brushed over that in the early remarks about the club. I mean, they're clearly not afraid to sell, and they're very careful. And I've often shared that one of the most absolutely powerful learning experiences in my career as an investment club partner was the night that we said we had 37 stocks in our portfolio at the time. We said we're going down to at least 20, if not 16. And you talk about the gut-wrenching but ultimately educational experience of going from 37 stocks to 16. I think I have to second what you said, Lynn, and the Plungers ladies. I mean, it really is an intense experience, and it's a good experience.
Well, Mark, I'll put a third to that also. Since my 2 major clubs began to focus on return and began to use the stocks with low return as challenge candidates, and since we started to do some selling and forcing us then to look for new stocks, it's been a much more interesting experience, especially in my older club that's been around for about 15 years now, a much more interesting experience when you have to go out and search for some new candidates and try to revitalize on a relatively constant basis the portfolio. It's a good problem to have, and it keeps you nimble.
Absolutely. All right, are we clear for questions, Don?
We are clear, Mark. No more hands, no more questions.
Well, I'll tell you what, then I'll just close with one last thank you to the ladies of the Plungers. It's a wonderful experience. I can't tell you how much I look forward to the next time we get together. In fact, one of their members kidnapped me for an educational session here in about 6 months. I'm already looking forward to that, and I know that it'll be an extremely enjoyable experience. So again, thank you, ladies. For those of you that follow us here at Manifest Investing, I am in the middle of putting together more on the user's guide, and it's just prompting a greater understanding on my end of we do need to have some more classes on the financial analysis of companies, the financial sector companies in particular, cyclical companies, and all that type of stuff. And we will be building out more opportunities for you to take advantage of. So, again, I'll just say thanks to the Plungers, and good night, everybody. We will stick around for a few minutes, but we'll officially bring the meeting to an end. I have it at 1 hour and 15 minutes now. That's a good time to do it. So, again, everybody have a great remainder of May. Enjoy your graduation parties, and just celebrate life itself here over the next month or so until we get together again. So good night, everybody.
Mark, there's a lot of real nice